What's up, guys? It's your boy, Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of AMC Entertainment, ticker symbol, well, you guessed it, AMC, trading for $5.60 as of August 16th, 2020, equating to a market cap of $605 million. It's been a crazy showing for AMC investors as the company is up over 166% since its lows in April, and yet down well over 50% from its yearly highs. So what's the move? Is it showtime on AMC, or finally time to roll the credits? This is your Quick Stock Analysis. So of course, AMC is the largest movie theater chain in the world with approximately 1,000 theaters and 11,000 screens across the globe, with either the first or second largest market shares in 21 of the 25 largest metropolitan areas, and the first or second largest market shares in 12 of the 15 countries that it serves in North America, Europe, and the Middle East. AMC is reopening more than 100 US theaters on August 20th, offering moviegoers a steeply discounted admission price of 15 cents on the first day, with limited capacity to adhere to social distancing guidelines. For a real flex, you could rent out an entire theater for less than what you would normally have paid for a single seat pre-Rona. However, we should note, due to the lack of new releases, movie theaters will be busting open the movie vault and dusting off some older reels. And after this initial opening, we can still expect to see cheap tickets for older titles. For $5, cinema fanatics can see titles such as Inception, Black Panther, Back to the Future, and The Empire Strikes Back, returning to the big screen. Let's get down to business. While we're on the topic of new releases, or lack thereof, some of you may be wondering about Disney's live-action Mulan remake. The details are still fuzzy on whether or not we will be seeing a theatrical release of this title in the US. Depending on how things play out, we could be seeing the beginning of a shift in how consumers view new releases. Let's take a look into the details to see if we can stay ahead of the credits. The remake is slated to be released on September 4th of this year on Disney's streaming platform, as well as some cinemas. For $29.99, Disney Plus members will be granted unlimited access as long as their Disney Plus subscription remains active. Considering Disney's success with Onward's early streaming access, following a shortened theatrical release due to quarantine restrictions, AMC investors should take into consideration Disney's decision to bypass cinemas and offer its latest, big-budget films directly to streaming. Subscription-based streaming could signal the beginning of the end for in-theater screenings if digital-first outputs continue to perform well. Granted, Disney's chief executive tried to downplay Mulan's release, telling investors it was a one-off and not a permanent strategic shift. However, I would take it as a grain of salt, as it will surely boost subscriber count on Disney Plus, along with digital revenues. And let's be real, the mouse has been known to follow the money. Film studios like Disney get a greater cut of revenue from going directly to digital when compared to your typical box office release, meaning films do not need to make as much money to be profitable, in a sense cutting out the middleman, in this case our boy AMC. Currently, there are well over 60 million Disney Plus subscribers. If we assume a third of them were to dish out that $29.99 premium to watch Mulan, the film would gross nearly $600 million in revenue, not counting the cut they will receive from its limited theatrical release. And regarding the other big boy, Universal, AMC stated in their recent earnings call that they have come to an agreement that grants the theaters a multi-year agreement which provides the theatrical exclusivity for all Universal Picture releases. This exclusivity lasts for no less than 3 weekends, comprised of at least 17 days. By that point, typically 80% of a film's theatrical viewing has already taken place. After this period, Universal has the option to make their titles available on premium video platforms. Potential investors should also be aware that there is a 74-day electronic sell-through window, meaning the movies cannot be sold in stores until 74 days after its initial release in theaters. Granted, we should note, quoting Adam Aron, the chief executive of AMC, this deal with Universal allows AMC to participate handsomely in the entirety of the economics of this new stay-at-home streaming structure, including receiving a share of each film's premium video demand revenue stream. When Universal Movies decides to go to home streaming early, regardless of who the retailer is, meaning if Universal were to release a movie to Netflix early, AMC states they would still receive their cut of the title's revenue. Once again, this offers a huge catalyst for investors, but the details are exclusive, so it's hard to say what the catch is. But I'm sure Universal isn't doing this from the goodness of their heart. Take into consideration, global box office revenue hit an all-time record high of $42 billion in 2019, with the majority of that coming from Hollywood studios. And I'm sure these studios would like to retain that piece of the market. Remember, of course studios have to split that income with the theaters. Contracts differ, but a studio makes around 60% of a film's ticket sales in the United States, and around 20 to 40% of that on overseas tickets. Anyways, moving on, AMC is finally getting on the bandwagon with their own on-demand streaming service, AMC On Demand, which one can access from the official AMC Theater website. Honestly, the website and app are decent. They offer recent blockbusters along with throwbacks. However, one could argue many consumers will still prefer the subscription-based model rather than movie rentals such as AMC On Demand. Along with this, very few people even realize this is an option, which makes it hard to imagine this being the game changer for the company. And it's certainly hard to say how the pandemic will affect the company in the long run. But what we know is AMC is not on solid footing. AMC posted a loss of $2.4 billion as a result of theaters being closed during the company's Q1 2020 earnings. I don't think investors would be surprised to see another massive loss next quarter as well. And when looking at the company's balance sheet, they already have a total of $10.3 billion in long-term debt and nearly $13 billion in total liabilities. Granted, the company posted $11.2 billion in total assets, but take into consideration a lot of these assets are in the form of contracts, buildings, equipment. Just imagine the company trying to sell 50,000 well-used slushy machines into this market. I kid, but for real, considering the switch in cultural trends, the company is going to need to do some massive restructuring. And they started doing so by cutting the company's dividend by 80%, still offering a decent return of 2.17%. But AMC stated due to the low share price, it would be better for investors to allocate the cash to a share buyback program of up to $200 million over the next 3 years. Considering the company only has a market cap of $605 million, that's a huge catalyst for investors. I wouldn't be surprised to see the company get rid of the rest of their cash pile and then file for bankruptcy. Which in all honesty, considering the crazy market we are in, I wouldn't be surprised to see the share price rally afterwards. The company simply has too much debt to ever become profitable with its current business model, and an investor should be ready for some major restructuring, which I suspect we'll be hearing about in the not so distant future. So with all of this in mind, what's our move? To be blunt, the market is going to follow consumer trends, and I wouldn't want to make a long-term bet on these massive theaters. Many people would prefer to buy a monthly streaming service than a single movie ticket. For many people, it's just simply better value. And along with all this, enhanced cleaning costs, including extra staff, HEPA vacuums, and MERV filters, along with having limited capacity showings with reduced prices. I just don't see a point where the company will be able to dig itself out of this massive debt load. And regarding the philosophy, it's all about supply and demand. When AMC first started airing movies, it was one of the only ways to view screen media. Televisions weren't that widespread or household staples like they are now. And even those who did have a television, they didn't have access to content that AMC was offering, and the quality definitely wasn't comparable. However, times have changed dramatically and continue to do so. Many homes have 4K television, soon to be 8K or home projector setups, with quality sound systems and a seemingly unlimited content of movies, television, and video through the internet. Like for real, you can go to Walmart right now and get a 4K 55-inch TV for $290, and a monthly Hulu subscription and call it $300. When compared to how expensive a trip to the movies can be for a family, after tickets and snacks, just one viewing could easily cost $100. And along with this, younger generations may not even have the same fascination for movies as their predecessors once did. Data points towards Gen Z preferring social media, such as TikTok and YouTube, over blockbuster movies. It's all about that instant dopamine, and at one point in our culture, movies were instant dopamine. But oh, how the times have changed. None of these points even account for people's reservations about going to a crowded theater in the middle of a global pandemic. And without the draw of new releases, it's hard to blame them. Due to quarantine restrictions, many movie creators have had to delay production on their massive blockbuster titles. Between the ever-inflating cost of a trip to the movies and people's hesitance to go out amid a global pandemic, Certainly for movies with a lot of hype, viewers will still want to be in line for the premiere. But for most titles, I can see a majority of people being willing to wait a few weeks to watch from the comfort of their own home. And on a final bear note, the company is so deeply in debt, it's going to be almost impossible for them to dig their way out. With all of this in mind, AMC is just not a company we feel comfortable adding to our long-term quick stock portfolio. But I should note, AMC does have some things going for it. It's an experience. It's a place you go with family and friends to have a shared experience. It has new releases. I wouldn't be surprised to see quite a demand for cinemas as people try to find a state of normalcy after being cooped up in their house for months. However, if I'm being real, I think this will be a temporary spike, as there is so much competition in the media space. Anyways guys, that's all we've got for today. As always, the best investment you can make is to go long on quick stocks. Hit that subscribe button now at 1,280 subscribers and plan an early retirement. I will catch you guys in the next one.